Hello, I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. I'm on a mission to equip business founders with the financial savvy they need to grow real wealth. So buckle up and let's dive into the world of financial success, innovative strategies, and the stories that make us all want to keep pushing forward. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey? Let's start crafting. Hello and welcome to today's episode of Craft More Cash. Today we're breaking down cryptocurrency accounting methods in simple terms. This is essential for all you business owners and investors out there really looking to optimize your tax outcomes as you navigate the exciting world of cryptocurrency. Right now, crypto is exploding, and you really need to understand how you could best maximize the strategies when selling crypto. So let's dive into how different accounting methods can affect your tax bill and what you can do to potentially reduce it. Imagine you bought one Bitcoin 14 months ago for $15,000 and another one 6 months later for $40,000. Then today you decide to sell one Bitcoin for $60,000. The question is, how much tax will you owe on this transaction? It all boils down to which cryptocurrency accounting method you use. By default, the IRS uses the FIFO method. That means first in, first out. That means that the first Bitcoin you bought is considered the one you sold. Okay, first in, first out. In our scenario, that's the Bitcoin you bought for $15,000. So if you end up selling it for $60,000, your taxable gain would be $45,000. But what if there's a way to reduce that taxable gain? That's where the specific identification methods like HIFO, which is highest in, first out, or LIFO, last in, first out, come into play. So let's talk about HIFO, HIFO, and LIFO. That is highest in, first out, and last in, first out. These are the two methods you can use to identify which crypto units that you're selling. Using HIFO, highest in, first out method, you prioritize selling the Bitcoin that costs you the most first. And in our scenario, that's the one you bought for $40,000. Selling that Bitcoin for $60,000, your taxable gain is only $20,000, which is significantly lower than the $45,000 you would have had if you used FIFO, first in, first out. Similarly, with LIFO, you sell the last Bitcoin that you purchased. If that last coin was $40,000, again, a $20,000 gain, significantly lower than FIFO. These methods can provide substantial tax savings, especially in a rising market. However, using HIFO could mean missing out on capital gains. The reason is you have to hold your long-term assets 1 year or more to get the long-term capital gains rate. If not, you can miss out on savings because the capital gains rate for long-term is a lower rate than if you don't sell it with a long-term gain. That could affect your tax gain applied. So it's very important to consider the capital gains long-term rate as well as which accounting method to use for crypto sales. To effectively use HIFO or LIFO, you must have excellent records. You need to keep track of the date and time each unit was acquired. So each crypto when it's acquired, the date and time. The cost basis and fair market value of acquisition. So how much you paid for it and the fair market at the acquisition time. The date and time of each sale. So not only tracking when you purchase date and time, but when you sell each one, and the fair market value at the time of sale. Without detailed records, the IRS may default you back to FIFO in the event of an audit. And that could mean you could potentially increase your taxable profits. Okay. So make sure you understand you have to keep these records. Most crypto investors find it challenging to maintain these records manually, especially if you're frequent traders. But thankfully, there are many specialized crypto tax softwares available that can automate these calculations and ensure your records are IRS compliant. So one of the great aspects of cryptocurrency accounting is its flexibility, because you can switch between methods annually. You can choose FIFO one year, LIFO one year, HIFO another year. So it's really based on what's best suits your financial situation for that year. If you have a lot of gains in one year, you may want to go back to when you initially purchased something at a lower cost. That's why it's important. The IRS, you don't need permission to switch. You don't have to disclose that, and you can decide which method you want to use each year. As you plan for the future, consider how each method impacts your tax liability. Looking ahead and choosing the right method before you sell can really help maximize your investments and reduce your tax bill. That's why it's important to work with your tax strategist continually, not one time when it's time to do taxes, then it's too late. So if you're looking to dive deeper into how these methods can specifically benefit your financial situation, or if you need help setting up the right record-keeping practices, don't hesitate to reach out. I focus on working with women entrepreneurs to grow wealth and to provide tax strategies. My system is called Craft Money Map. Craft stands for cash management. We know that as entrepreneurs, you have to manage your cash and have cash and able to grow your business. R stands for retirement, making sure that you're utilizing the tax code to maximize your retirements, and the investments that you have are ways that you can really grow to have freedom during retirement times. A is for assets. We want to make sure you're protecting your assets, you're growing your assets. If you're interested in different type of investments like crypto or real estate, we want to make sure that you have those assets and they are being protected. F is for freedom. So the financial freedom, how you define financial freedom. That's why we work together to have a customized plan so that you can live out your dreams of financial freedom. And T is tax strategies. It all starts with having tax strategies, using that tax code, getting money back that you would usually pay in taxes, and using that then to fund your retirement, to fund your investments, to fund the cash to grow your business. That's all about the Craft More Cash system. So if you're interested in learning more and seeing how we can work together so that we can strategize a plan for you and map out your financial plan, please visit craftmoneymap.com/call, and let's set up a call now. Together, we can strategize the best way to manage your crypto investments, your other investments, your business, and potentially save big on taxes. So let's craft more cash.